is run by a bunch of investment bankers, and Morningstar's tools help make it.
I'm on the line with John Gabriel, our ETF analyst. He's joining us from Chicago. We just covered tactical ideas for ETF investing, so now we're going to move to strategic. So John, can you define strategic for us?
Sure. It's good to be with you, Ashley. And yeah, so strategic investments, here, those are the investments that we hold in the core of our portfolio over, basically our entire investing life cycle. For example, people that tend to think about it in the core satellite approach. So in the core, Canadian investors will probably have an allocation to domestic stocks, U.S. stocks, international equity, and fixed income. So in those positions may be rebalanced over time, but you're not trading in and out of them as you would maybe in a tactical investment that has a shorter time frame.
Okay, and are investors using ETFs for strategic long-term exposure to the U.S. stock market? And if so, can you give us some examples of which ones they're looking at?
Yeah, absolutely. I think investors are using ETFs to gain exposure to U.S. markets. Still very early stages of growth there. I think more and more investors are still learning about the benefits of ETFs. But there are several options in the Canadian ETF market to gain access to U.S. stocks. The oldest and probably the largest of the group is the iShares S&P 500 index fund, and that has a Canadian dollar hedge on it. The ticker there is XSP, and it tracks the S&P 500, which is a market capitalization weighted index, and charges a management expense ratio of 24 basis points a year.
Okay, and what about HXS?
Yeah, so HXS, that one is the Horizons S&P 500 index fund, and it also has a Canadian dollar hedge. But here, this ETF is a different structure in that it uses a total return swap to gain its exposure. And, so that would make it fall in the category of synthetic ETF, but it is a cash-secured, fully collateralized swap. So, the counterparty risk is pretty limited in this case, and it does have some advantages to consider that come along with the structure, in that by using a total return swap, you get the benefit of reinvested dividends over time, whereas a fund like the iShares fund, XSP, will pay out its dividends quarterly. So that's something to consider whether you're an investor that needs the income or if you're more total return minded.
And can you tell us a little bit about VUS?
Yeah, sure. Oh, on HXS, too, I should point out the fees there. It's 15 basis points management expense ratio, but I would also point out that there's a 30 basis point swap fee for that total return swap that goes on top of it. And yeah, so VUS is the newest of the group, and that's the Vanguard MSCI US Broad Market ETF, and that does have a Canadian dollar hedge as well, and that charges 15 basis points. This is pretty much the quintessential index fund in that you're getting access to about 3,500 stocks that trade on U.S. market, so it's 99.5% of the U.S. equity market at a rock bottom expense ratio of 15 basis points. It is market capitalization weighted. Since it does have so many holdings, it is less top heavy than the S&P 500, but that's an excellent way to go for strategic investors looking for long-term access. You can't, when you say buy the market, that the Vanguard product is pretty much buying the market, the entire market.
Great. And are there any other picks or ideas you have with this investing style?
Yeah, the ones we went over were the traditional indexes, market cap weighted. There are a few other ways to gain access through fundamental indexes or intelligent indexes. One pick there would be the XTF Morningstar US Dividend Target 50 Index. The ticker there is UXM. And also iShares S&P US Dividend Growers Index Fund. The ticker there is CUD. And both of those funds charge 60 basis points for their management expense ratios, which is a little higher than the first group we mentioned. But do remember they come with built-in rules to screening for fundamental factors and they aim to outperform and give better risk-adjusted performance than those traditional plain vanilla indexes that we mentioned.
That was a lot of great information. Thanks so much for joining us, John.
My pleasure. Great to be here. Thank you, Ashley.